Hello and welcome to another MCO market update on ADA. The ADA chart continues to be in a sideways consolidation phase that I labeled here as wave 4 in the white scenario. Still unchanged, completely unchanged. I mean, this triangle looks a bit sad, I have to say. I mean, it would look best if this D wave stretched a little higher. So I will not rule that out. For now, the local uptrend, I would say, is still unfolding in this D wave. That's just a D wave in a triangle. For those of you who are not so familiar with Elliott wave, a triangle pattern like that is a 5-wave move. It's a sideways consolidation pattern, and the pattern is typically forming a series of lower highs and higher lows. And at the moment, we are forming higher lows here, or at least there's a double bottom that's absolutely acceptable in a triangle. And all it needs to do is to keep that white scenario alive, is it needs to hold above the red line at 51 cents. Now, I've remained of the view that this could at least be a triangle since we had a top in January or December? November already. No, December. And the idea was that as long as we're holding 51 cents, the pathway for this triangle, the 4-5 pattern in the white scenario, remains plausible. And we haven't broken it. So that's still, I mean, for the last couple, quarter of a year or so, that's been my view, a bit longer even. And that's so all very consistent with previous updates. Now that we start to see the market go up a little bit, ADA has followed, but not really in crazy ways, right? I mean, the idea was this triangle would be followed. So far, it is being followed, but the D wave could stretch a little higher. That's what I'm trying to say. That being said, any break below 51 cents requires a reinterpretation. Not really a reinterpretation, actually, because it is already on the chart. I mean, what would be, let's call it an alternative support area if the price goes a little bit lower? Well, we would shift the focus towards the 35, 36, 29 cent area down there, the previous swing lows from October, September, August last year. I mean, it needs to have the right look somehow. It doesn't have to have the right look, but the right look is a concept that is quite important in ADA, in Elliott wave, and on the ADA chart. Yeah, the triangle, as I said, is a little bit sad. It needs a bit more of a higher D wave, ideally, even if just marginally higher high would be ideal. But as I said, if now an E wave started for some reason, right, then as long as it's holding a higher low, it should be good. And on our smaller time frame, I have highlighted here what key support is, as I said, which is 51 cents. And on the smaller time frame, there's actually a Fibonacci support zone that we can watch. So let's take a look at the micro patterns, shorter time frame, here on the ADA chart. And this is this support zone, yeah, micro patterns. And you can see that on this chart, we're tracking this D wave, this D wave to the upside as an ABC structure. And the C wave to the upside would be a 5-wave pattern. ABC, yeah. And this would be a 5-wave move, 1, 2, 3, 4, 5. Now, I can already identify 5 waves up. I can do that already. Got 5 waves already. But it is just not very, very clear. It also hasn't reached the 100% extension level yet. That would be ideal. To get to 78 cents would really be ideal. And the 100% extension is typical target for such a C wave. I'm talking about the ABC structure in wave D here. The D wave is typically a corrective rally. If it's a rally, it's a corrective rally. And so while we are looking for 3-wave patterns overall, the C wave has already done what it needs to do in this 5-wave move. But because we haven't reached ideal projections, especially the 100% extension, and because the pullback kind of looks corrective, I'd actually like to see that one more high. That's all I can say. Micro support is still being respected between 68 cents and 71 cents. But as I said, just visually, this is already a 5-wave move. Because whether I call that an A wave of 5 or already all of it, honestly, both valid. Both valid. And how can we distinguish now between, okay, we get another high and we're already in the next larger pullback that might be the E wave? Well, for me, that's the, first of all, 68 cent level. That's not so important, that level. More important, the red line down there at around 67 cents. And that is the previous swing low from Thursday, the 24th. That is a key level. And as long as we're holding that 67-cent level, we could watch for this, let's say we could watch for this bullish pathway to play out. Short-term bullish. Not saying this is an ideal structure. Not saying this is a great setup. Not saying this is a 5-star setup or anything. No, I'm just pointing out there is a corrective pullback here. And as long as we're holding 68 cents, we might see that one more high, really. And okay, below that level, prepare for a test of 67 cents. I mean, below that level, it could accelerate the decline. And then, quick reminder, the E wave would also be an ABC structure, ABC. And I have added just standard support, like a standard Fibonacci retracement area measured based on the length of the rally from the 7th of April low to the 24th of April high. So just a standard zone based on that. It's between 53 cents and 62 cents. So that's how I track it at the moment. Again, that area will shift if we get another high. At this point, I would slightly prefer, I think, another high, but at the same time, I have no evidence that a local low has been established here. So let's see if the buyers turn up around 68 cents, at the latest 67.1 cents. That's the update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.